17 of 21 series are aligned with a stagflationary configuration this morning. That is a strong but not absolute level of agreement across the framework. The current macro regime is stagflation strong, with a confirmation score of 17 out of 21. In regime terms, the engine is observing a macro regime where growth momentum is decelerating at 0.17 on the internal scale, while inflation momentum is accelerating at plus 0.02. That combination, slower underlying activity with firming price pressure, is what the framework labels stagflation strong in purely mathematical terms. The coherence score is moderate, and the same 17 out of 21 confirmation score marks substantial systematic alignment without full unanimity across the 21 series. By our historical archive, regimes with this level of confirmation have persisted in roughly 41% of comparable cases over 3-month windows, with acceleration the most common next state. A record of past behavior only. Compared to recent weeks, confirmation has moved up into this stronger alignment band, even as growth momentum has continued to soften and inflation momentum has nudged higher. Historically, environments like this have felt grinding across broad indexes, with defensive sectors and real assets often holding their ground more effectively in the data, again as observation rather than guidance. Let's walk through 4 signals the engine is tracking today. First, the 10-year Treasury yield, a core reference point for long-term borrowing costs, is around 4.63%. The framework tags its inflation linkages green, meaning price pressure momentum is mathematically accelerating at plus 0.02, while growth momentum decelerates. Markets watch this yield because it condenses views on inflation, policy, and term risk into a single number. In our framework's reading of comparable periods, this roughly coincided with stronger inflation composites and uneven equity performance within 1 to 3 months, a record of past behavior, not a forecast. What would challenge this read is a sustained move lower in long yields alongside cooler inflation data. Second, labor conditions. Non-farm payrolls and related employment gauges are flagged red in the engine today, consistent with Chair Powell's comment that job creation has virtually come to a halt, meaning labor momentum is weakening even as inflation remains a concern. Participants watch these numbers because they speak directly to income growth, recession risk, and how much policy tightening the economy can absorb. In our framework's reading of comparable periods, this roughly coincided with pressure on cyclical sectors and a premium on quality balance sheets within a few months, an observation under our methodology, not a forecast. A clear challenge to this interpretation would be a re-acceleration in hiring and a drop in jobless claims back toward prior lows. Third, credit markets. High-yield corporate spreads and rate volatility have repriced sharply after the latest Federal Reserve meeting, with the MOVE index around 70.88 and credit conditions tagged yellow for caution. Markets watch these spreads because they summarize how much extra return investors demand to hold riskier corporate bonds. In our framework's reading of comparable periods, this roughly coincided with choppy returns across leveraged credit within subsequent weeks. A record of past behavior, not a forecast. What would challenge this view is a durable tightening of spreads and a calming of rate volatility back toward the lower end of the recent range. Fourth, commodities, especially oil. West Texas Intermediate crude is near $90 per barrel, with energy prices pushed higher by conflict in the Middle East and recent attacks on Saudi shipping lanes. The engine labels this inflation-linked commodity signal green, reflecting accelerating price momentum. Markets track this closely because energy costs filter into transportation, manufacturing, and ultimately consumer prices. In our framework's reading of comparable periods, this roughly coincided with stronger inflation gauges and better relative performance for energy and materials over the following month, an observation under our methodology, not a forecast. A sustained reversal lower in oil and shipping costs would be the clearest challenge to that historical pattern. On the conditional map, 2 if-then structures matter today. If the 10-year Treasury yield crosses 4.45% and holds that level for 5 consecutive sessions, in our framework's reading, inflation composites showed acceleration in roughly 9 of 11 comparable conditions. A historical characterization, not a forecast. Historically, that kind of sustained yield move has appeared in transitions toward stronger inflation momentum within the regime archive. If the Fear and Greed Sentiment Index drops below 15 and holds there for 5 consecutive sessions, in our framework's reading, the regime confirmation score deteriorated in roughly 7 of 9 similar conditions. Again, historical, not directional. Historically, that deterioration has been associated with more fractured regime alignment. The map is live. These conditions are being monitored daily across all 21 series. Atlas is the automated rules-based engine inside Given Analytics. It does 2 things in parallel. First, it publishes a view of the macro environment, the regime, the confirmation score, and the historical base rates we just covered. Second, it runs a fixed 4-layer mathematical framework: price structure, rate of change, risk regime, and market participation, across 407 liquid symbols every trading day. When all 4 layers agree on a symbol, Atlas records it as an upside-aligned or downside-aligned condition under the framework, a reading of how the 4 layers line up, not a trade. These are time-stamped model readings, logged for members to study. The environment view and the condition log sit side by side inside Atlas. They are separate outputs. The regime does not pick the symbols, the 4 layers do. Members use Atlas to study how the framework has recorded conditions across prior environments, as historical behavior, not as trade selection. Atlas runs the framework. You study the outputs and environment. You decide what to do next. The framing is always may, potential, educational, describing how 21 series and 407 symbols have behaved, not prescribing actions. The morning brief is the public surface. The live Atlas dashboard shows the full 21 series regime map, today's mathematical conditions across 407 symbols, and the historical archive side by side. Members study the environment and the Atlas outputs each morning. If you want to track this alongside us, the live view is at givenanalytics.com. Free to try, no credit card, for the first 500 founding members.